Welcome to TradeTheNBA.com. This is John. This report is for the 30th of October, and we survived another one of those October, 29 crash theory. The world's ending, and shorts obviously got excited by the prospect of it. All we did was come back for a retrace, and then we balanced out immediately with the shakeout coming back up. And so all that did was reset the overbought as we consolidated. We had our couple little tests to the green, supported off that. Nobody was going to attack it from there. And then we had a full steel reset. Sure enough, took off the back. We had our daily NBI Opus. We had taken the previous one there. We ended up with another Rainbow Hawk. Let's see. I think we should be very close to all-time equity highs. So that's the so far for the year. Look at the performance report right here first. So still right around that 75%, 221, 1.8. And there it is on the graph. So what was the peak value? It would have been right over here, 66,350. And we're at 64. So one more trade, and that would do it. So good to know. Long running account on that. So that's been a constant. So here the NASDAQ had been underperforming, and obviously some good results causing it to just explode through. And so you went from a complete up to complete down. Yes, it's overbought. These will get retraced, just not right yet. So it's going to take a little time, because also too you get this short move all the way down here below the 7.5. Probably not going to sustain itself too long. Usually that pops back up and creates it, and even still you should get a little bit of pullback within this. Don't expect it to be too significant. The euro coming back right towards the range. The key is whether it holds up above it or breaks down in there. Of course, before we had the buy signals that took place right down here as we were pointing out the divergence rising higher, and got right to our range. Once it got above the range and held it on this retest, it just took off from there. Hasn't looked back since, and that's currently where we're at right now. We've been in this spat of weakness, well, for quite a bit. It even goes back to earlier over here. We just had a couple little up moves, but pretty much traded across from there, and now it's just retesting. Still some more positive extremes to fill. I think we could go all the way back to here, which would take us right down into that 112 range. So we'll look for that down the road. Not quite time for it. You'd have to see more disruption from Spain, that kind of thing, which is possible. If it starts to breed turmoil elsewhere, who knows what it'll be. TLT, still elevated comparative to what it should be, but that has never stopped anything with the market. Should be's are just relative to where people want to put risk, and at this particular point, they're willing to take no yield. And oil breaking in. This is an indication that the economy likely to continue to heat up and actually even get stronger, which is, a great thing for everyone. The real question is how far can it go before it gets to be a little bit too elevated? We'll have to see on that. But what this is giving us an indication is that the basis for stock prices as they are is solid. There's nothing to suggest that there's a huge glut that's going to be developed because of slowing demand. So that is a critical aspect of planning for year-end. Typically, too, year-end has a strong bias going into the last couple of months. So we could be getting very easily towards that 2650 range before then. Gold, again, still in the malaise. We talked about this with the steel. It's a little hard unless you get a reset. We've just been cascading lower here with the long-term and short-term buyers on the DOC. Shakeouts continue to stay negative. We're below the red line. All the things that just say that any pop isn't likely to sustain itself just yet. And that's just because we're not getting the core inflation readings that you would look for. So you wait for that. But this is basing fairly decent. Doesn't look like we're going to get an imminent decline from where it is now, but still have to take it for what it is, and it's going to be more weakness still to come with it. From the 5K chart, here was the action. Started out here with dip below the red line from the previous day, and then as we started out, we ended up with another dip right along the beginning of the breakout and sort of traded sideways for a long time until we got to the peak here. Then we started getting all these warning signs coming through with the extreme. It wasn't until we broke slightly down below the plus 25 here on the shakeout that we started to capture some more weakness, and that's exactly what we're seeing right now, just filling in. We got positive extremes going right back to here, which is exactly where we've retraced, which is the 7250 range. So there you have it for that. So we've met that requirement, at least in the short term. So all in all, I would expect that we're going to see a little bit more rebalancing here as we go into it, but effectively we should still stay towards the highs because shorts have pretty much been beaten up a little bit. You got to get a little backfill within it, which is typical, but should start to turn around later. We're not even seeing the reset yet, so we're still in a short mode for this particular point, but it's very early pre-market, so plenty of time. We'll just take it as it comes, and I'll post the charts as necessary. Trade well. We'll talk to you later. All indicators will be getting set to come out for November as well, so be ready for that. Trade well.